Dude, one of the things that I'm so bullish on, no matter where you're at in the land business, you could be pretty senior, is like when you don't know how to do something, just go partner with someone. You get paid. It's more of a sure thing than you doing it yourself. And what I always ask is, look, I'll give you this deal, but take me along for the ride. We're going to do what we call the LIA Coaches hot seat. Just like the speed dating, this could absolutely flop. We'll see. We're going to roll the dice here. Remember, I'm a risk taker, so we'll see how this goes. May work, may not work. The premise here is that, as you guys have probably learned today, man, I need to do some yoga after that. I am feeling stiff. What you've learned here today is that there's a lot of ways to skin the cat in the land business. And frankly, the fundamentals of all of our businesses are pretty much rooted in the same ideology. Just the LIA frameworks applied with slight variations. And what we've done is we've gone from most senior to least senior. Right, I'll be sitting over here. And I'll kind of explain, I think, the different perspectives so you guys have context. And what we're going to do is you guys are going to have questions. You ask the questions. You're going to get kind of a short little elevator answer from all of us, okay? Whichever one resonates the most, take it, run with it. For context, I would say the area that I enjoy most, or maybe the area that I have some level of effectiveness, is more on like the team building side. I think that's the area that I've found the most joy and I've found the most bang for our buck in terms of finding amazing people and working with them, like Jordan over there, Big Dog Jay. So that's the area that I really thrive on. Like my vision is having dozens or hundreds of employees. Some people, that sounds terrible. I'm like, I'd love that idea. I love having a team. It's like a family. Mike, as you guys know, over here is how can I work the least and make the most? Mike is straight just pragmatism, right? Ryland, as you guys saw, he's all in the back end, data, getting very, very clear on how the land business actually works and breaking it down to kind of first principles and just going off of that. And I would say I have a touch of that in me as well. I'm kind of like a hybrid of Dennis and Ryland, I would say, not so much Mike. And Dennis, I would say, is one of those guys who's like high EQ, high on the soft skills, doesn't need to know how to pick markets, even though he does, and will still just make deals happen. Like he's a kiss baby, shake hands kind of guy. And I think I'm somewhere between him and Ryland. I think it's a really powerful skill set. Dennis is the kind of guy that you would love to have on your team for acquisitions. Man, I would pay the big bucks to have Dennis on my team. I would love to hire Dennis for acquisitions. Now, for context, you guys already know Mike's story. You know Ryland's story. You don't know Dennis's story. Dennis is going to present tomorrow. We actually built a program around Dennis and Rob. Rob is Dennis's partner. He couldn't be here. Why isn't Rob here? You're his partner. What do you mean I'm asking the wrong? Some partnership you guys got. That's why Ajay and Ben are going to talk about partnership tomorrow, not Dennis and Rob. Rob's not even here. But we did a really cool kind of what we call like the 90-day zero hero challenge. And so what we did is we said, cool, can we take two folks that have never done a land deal, that are brand spanking new? You guys have real estate experience. Tell them about your real estate experience, can you?
Yeah. So I've been in real estate for like 13 years now, fix and flips mostly, stuff like that, wholesales, all that general stuff. And I've just gotten sick of that whole monotonous back and forth crap. I mean, I'm still addicted to it. I'm never going to recover. I have a flip on Monday I'm selling and another one I'm buying just because I'm an addict. But yeah, it's whatever. But yeah, I've been doing general real estate for all that time. Now I saw my ROE, my return on effort with land is way higher. I can make $10,000 an hour on land, whereas flipping I can make like $600 an hour. So I'm like, why would I waste my time in houses when I could do land and scale that to a greater degree? So that's where I'm at.
So what we did is they weren't new to real estate, but they're land beginners. And we started with $10,000. We said, the problem is, but let me just back up. The problem is like if you go into LIA, it's really like LIA is really built for someone that's 3 to 6 months into the land business, just starting to get traction and wants to go from like 0.5 to like level 2 or 5. It's not really to get to level 10 necessarily. It's like, how can we get you to making $500,000 to $1 million a year? Small team, systems in place. But we never really had an offering for folks that are brand spanking new. Like I didn't want to really show people how to go get their first deal. It's just not the people I love to work with. The people I love to work with are the land investors that are on life support, straight up. These people that go through other land programs, they've spent a bunch of money, it's not working, but they're really adamant on building a land business. They're gritty. I know they're gritty because they've been eating shit for 6 months. And they're like, dude, I need some help. Those are people I love to work with. We didn't really have anything in place for brand new folks. So I wasn't going to do any coaching for new land investors. I said, why don't we build a program around this? And so for 12 weeks, every single week, we documented every single thing we did in Dennis's Rob's business with $10,000. And that included software costs, any of like the back end stuff that we needed. What went into that? I mean, it was obviously marketing, Pebble. What else did you guys use?
Pebble, Pat Live, data tree,
Yep.
marketing, and then that's
Pretty much it. So 10 grand, how much do we turn that into in 12 weeks? 250K in pipeline profit. How many of those deals have closed?
We purchased 4, we're waiting on 2 more, and just having contract to sell 1 today. And then,
I love that. Contracts in an event? Come on. How much did you sell that for?
it was buy for 60, sell for 120.
Beautiful deal. How much cash has been collected gross profit from the challenge?
That'll be about 8,000 so far.
80,000 so far. Cool.
6 months,
It takes a while. So really cool experience, and we documented all of it. Anyways, what I'm trying to give you is context on where Dennis is at in his land business. So he's newer to the game, but the guy's really hit the ground running. But really where he shines is on the people-to-people stuff, the acquisitions, the dispositions, to working with realtors. The guy is a schmoozer in the best kind of way. Like, we could all learn a thing or two from the way Dennis communicates. He's just an amazing communicator. This guy is such an amazing communicator that he's finagled his way into absolutely everything I've ever created. And I mean that in the highest form of respect. Not even like in like a cheap cutting corners way. The guy's just smart, man. He just knows how to network. He's up here right now, man. Tells you something. So I think it should be really fun. Amanda, lovely Amanda over here, is going to be running around and passing off the mic. One thing that I forgot to do you mind if I say this?
Sounds like you're going to say it anyway. Oh, yeah.
Sorry. I meant to do this earlier when Mike had his speech, but I wanted to take a moment to congratulate Mike and Elle. Elle is pregnant. They're having their first kid. Yeah. Super awesome, man. Super awesome. I think you guys are going to be obviously amazing parents. And I hope at some point you retire Elle through the land business. Elle just does what she wants, and you bring home the bacon, all right? Is that right, Elle? Yeah, that's what I thought. All right, guys. We're going to go just kind of raise hands fashion. We're going to pass the mic down and give an answer, and we're going to let this rip. We've got potentially 45 minutes on the clock, so we'll see if we use a lot of time. If not, we're going to move to a little networking session, and we're going to have just a small closeout speech. We're going to go home because I know everyone's tired. At least I am. Sound good? Yep. All right, let's do it. I think it's going to be wildly different for all of us. And like this business, at least for me, I'm always evolving. So what I was doing last year is totally not what I'm doing this year. I think it's also because every real estate vertical is going to be somewhat cyclical. I think we're kind of in a weird stage in land. Who feels like land's harder now than it was 2 years ago, a year ago? Anyone? Really? Seems pretty okay. You guys are really good, apparently. I think it's definitely a little harder than it was a year or two ago. But also, like a year or two ago was like synthetic. Like it was just crazy because of COVID. As it stands right now, though, kind of like our mid-market classic flips, that's going to be double closes, unless it's just a crazy deal. Like the deals where you buy for 20 and you sell for 80, and there's like no denying that it's going to sell in that range. Like, it's just so good that I absolutely want to hold title to it. Otherwise, we're probably going to double close. And then anything that's in a market that has exemptions that we can use, where there's demand for 10 acres or whatever it may be, we're going to go and actually try to do a minor subdivide. And what we've moved into is doing like paper lots. And so that's a new world for us. But it's really cool. Like, we have a deal right now that's in Augusta, Georgia. A LIA member brought this deal to me. It's a buy for $350. I think as is, on a good day, if the market doesn't correct anymore, it's probably worth $700. On a bad day, it's probably worth $600. It's 47 acres. We're turning it into paper lots. It's in a really hot market. It's in South Augusta. We initially underwrote it, so we could like technically get almost 190 lots on this property. That was like max capacity, but you typically never going to get max capacity. There's a little bit of topography to it. And so we underwrote it as, okay, we're going to get 100 lots, which we think we get 25K to 30K per paper lot. So we don't look at it per acre, we look at it per paper lot. Puts us at like $2.5 million to $3 million. We got the, what's up, man? We got a new joiner with us. What's up, man? Good to see you. Thanks for joining. So we just got the initial sketch back from the engineers. It placed it at 74 lots. So it's probably like closer to 1.5 to 2 million for the project. I'm saying all that because that's a deal that we would have just flipped, right? And we can unlock $1 million+ of value by waiting an extra 9 months and taking on more risk, right? We've spent $7,500 on engineers, and that deal could still go sideways, and I can make nothing on it. It's just the cost of doing business. But like I talked about this earlier, I've just found that it's really fucking hard to grow a land business and continue to grow if you're going to do it via quantity. So hard. Who in this room thinks they sell a crazy amount of deals every year, like in the hundreds of deals? Anyone? How many deals do you sell? Last year? Yeah. What? Wholesale? Okay, I know, Peter, I know you do, but you're like an outlier, dude. You sell mainly wholesale. Oh, you guys are together. Yeah. Okay, that makes more sense. Yeah, but you guys are like mega outlier. I'm talking taking these properties retail, right? I mean, it's really hard to scale past a couple hundred a year. So at a certain point, it's like just the quality is the thing that you have to go after. I look at quality, typically it's related to price point. And price point typically means that we have to stack some kind of value add strategy because you're just not going to buy them at the same discounts. You know what I mean? One thing that I wanted to mention earlier that's super important, I think Kyle might have touched on this briefly, but I want to just add a little sauce to it. And I think we might talk about this tomorrow with Clint with our Hill County property. I could be wrong. But like thinking, and that was our first minor subdivide ever, thinking about is what I'm bringing to market, is there a real demand for that, right? So like it's like me going and selling a widget online. Do people want whatever widget I'm bringing to market? Just because you can subdivide it and the math looks good doesn't always mean you need to bring 6-10 acres to market like we did in that situation. And this isn't a bad project. It's just slower than we thought. And now that we've gotten sharper at it with our new subdivides, it's like these markets are hot. And we know people want whatever we're bringing to market at that size range. Like in Augusta, 50% of the housing inventory turns over every 30 days. You think builders want paper lots? For sure. I could create paper lots and bumfuck nowhere and no one would want them and you could get stuck with them, right? So you really have to read, like, does the market actually want what you're bringing? Damn, I go way too long, guys. I'm sorry.
Yeah, mine's super simple. We do like 60% standard flips, probably 40% double closes, and we have one entitlement deal. You guys want to see how lazy I really am? I got like $1 million deal. I don't even want to do it. I just gave it to him.
He gave it away for free to someone. I called him up like, dude, give that to me right now. You're not giving that up. 800K slipping through my fingers, right?
Yeah, I'd say I'm like 50-50 between flips and double closes right now. I'm not really doing any value add. It's outside of the assembly line I was talking about, and it's just, I can't scale that. It's not scalable. It just takes a lot of research, and I don't have the time to do that. So trying to figure out somebody I can pass these off to, and they can underwrite them for me.
Yeah, I kind of forget your question, neighbor. I don't know, whatever. What's that? Exit strategy. So right now, if like you're a new investor, I say heads down approach, buy property, flip it. That's it. Don't try to think entitlements, do all that crap. Like you're not there. Just head down, buy, flip it, move on. If something comes across your plate that could be an entitlement play, you got people that are senior to you that could obviously do it. Just partner up, hand it off, or give it away like Mike does. That's what I'd say. For me, I want to make the prettiest property that's on market. So I'll do, add a driveway, add a gate, stuff like that. If I have a forestry guy in that market that will do it for a reasonable price. But if I don't, I just get it, list it, and move on with my life. That's it.
One thing I want to add to that too. I'll be quick. Rylan brought up a really good point though. Like Rylan and I think, and this is maybe the reason Rylan and I connected so much. They were like one of the few people that really obsessed over assembly lines. Like I geek out on like Henry Ford building assembly lines. I just think it's so fascinating to me, and that the land business is pretty binary. Like you can really build it into assembly line, but every strategy that you add needs its own adjacent assembly line or an extra step with a new person in it, right? I keep on calling on Jordan over there, but Jordan's been with us for almost a year. The guy's amazing, and we've just been working exclusively on value add deals. Like our previous acquisition team just does the bread and butter, and Jordan's been running point on both acquisitions and kind of project management, I would say too. And so you do need to build the teams around it and the systems around it, right? And every time we stack a new strategy, it's a new learning process. What I do though is anytime I add a new strategy to my business, I roll up my sleeves, I get my hands dirty for 3 to 6 months, just trying to learn it. I can't delegate unless I actually know. It's like people that come into the land business and have money, and they're like, dude, I'm gonna build a team right off the rip. I'm like, no, you're not. You don't even know how to do the thing. How are you gonna manage the people, right? You have no context. So yeah, all right, next question.
So you answered part of this for your business, but for all of you, if you have a lead that comes in that doesn't fit your model, but it still has potential.
Give it to me.
Well, that's it. I would like to build a network of okay, I do landlocked properties, I do probate properties. Do y'all have something like that?
I mean, I kind of like via rooms like this or just meeting land investors. Like I didn't have this 3 years ago. I didn't know anyone really in land at that point. That's actually a funny story. I was going to save it for tomorrow. The only person I knew in land, I didn't even know him, was Clint. I don't know if you remember this, Clint. Maybe beginning of 2020 or somewhere in that range. I was going to sell my first owner finance property. And again, here's the fear of getting litigated. I was so scared that I was going to sell it and I was going to get sued for some reason. I have no idea why. And so I saw Clint on Facebook put up like a book a call. And I booked a call and I pretty much was like, dude, how do I do this, right? So I had no network at that point, and it's a very recent thing. But like just for example, like in the last week or two, Kyle in this room, who Kyle talked about value add, I gave him a value add deal that was brought to me that I didn't really want to do. Kyle will probably give me a little slice of that, right, Kyle? But yeah, just like I think it's events like this and just making it known, and for other people, making it known what you do. So like, who are you the go-to person for X? Make that known, right? Cole came into the program, Mayor's inside LIA. Mayor's like, hey, I'm the double close guy. And so immediately Cole knows who to go through or who to go to. So just like clarifying that and getting that out there. And you'll get deals sent to you and then you can know where to send the deals to. But if you have value add deals, send them to me. I'll help you.
Yeah, I think like Sumner just said, make it known like what you specialize in or what you focus on. Like Mayor's the double close guy. Like rather than just saying I'll take any deal that doesn't work for you. Like if you're like the probate queen, right? Like I just get probate, then I understand. Okay, any probate deal I'll give to you, rather than just like any deal that doesn't meet our buy box. So just like like raise your hand basically and say I'm really really good at this thing, and then like if something goes wrong or whatever that thing is that comes up, like you're the first one that I think about. Typically in our business though, the deals, like if we're not buying them, it's more just because the price doesn't work rather than like a probate issue or like it's an entitlement. It's like a rare case, but typically it's just because the price doesn't work. But yeah, like if like you were like, specialize in probate and like I had a probate deal, right now I'll just like let it go to the wayside. I'll just move on. But if I knew somebody that really liked probate deals and wanted it, sure, I'd give it to them. I just don't know anybody who likes that stuff. Maybe Rylan likes that stuff. It's really easy. No. Yeah. So I would just say like make it known for whatever it is that you specialize in, so that those deals get handed off to you.
If you have a probate deal, send it to me. But basically, you just got to find the right attorney that can handle it, and a lot of those probate attorneys will get paid at closing if they think they can actually get it clear. So it's pretty simple on those. But yeah, I think finding the right types of people to partner with is important when you're outside just a standard flip. So just find the right people to work with.
How much does that go along the deal cycle on average?
I have like 5 that are still in probate. It takes like 6 months or more.
6 months is pretty steep.
Yeah. Yeah, there's some where I was able to handle it in like a month and a half. It's just different by every state. Transfer is different. Go ahead.
So how do you navigate marketing on the disposition side with a double closing? Are you able to find agents that are you able to find agents, real estate agents, to list it on the MLS, or are you marketing through other avenues?
You want to start us over?
Oh, yeah, absolutely. So when it comes to double closings, transactions, are you finding it hard-pressed to find real estate agents to list it on the MLS, or are you just trying to market it through other avenues?
Yeah. So if you find the right flat fee broker, you can list most double closes. It depends on the state. Some will make it a little more complex. The way I look at double closes though is like, let's say 7 out of 10 work. I want to keep costs in each double close as low as possible. So lowest earnest, I pay $500 on almost every deal. Some we pay a little bit more. Dude, we're controlling a $300,000 property in Texas right now that we're probably gonna sell at $450, $470 with $500 earnest. I mean, it's just crazy. And the next thing is I want to keep cost out of flat fee cost and cost out of taking photos. So we started doing flat fee stuff for double closes. I'm like, nah, let's just go use realtors. So we spend a lot of time trying to find the right realtor, but they take photos. Our requirement is they have access to drones. They take the drone photos. They pay, obviously get on the MLS and they handle all that. And we just let them know. I mean, they obviously know it's a double close. And we say, hey, we've got whatever, usually 120 days to 180 is what we have on a double close. And they just know they've got to move. The funny thing is, like, realtors perform better with double closes because they know their back's up against the wall and they have finite time. And so we just found it to work really well for us. So I would say realtors for double closes all day long. That's why Rylan has someone calling realtors though. It is a lot of work to find them. And again, double closing is a who not how game. So like once you have that realtor, it's easy money and they just throw it up and you're good to go. One what you could do, Jay's in this room. Jay had a kind of a cool little concept for finding double close realtors. You got to kiss a lot of frogs. He's had a VA go and grab phone numbers for realtors. I forget where, land.com or Redfin. Got 50 of them, text them, just like straight to the point. Yo, I have a double close. Will you list it? And like 3 people respond. They say for sure. The other people either don't want to or they just don't know what a double close is.
Yeah, typically realtors just get it or they don't. So if a realtor doesn't get it, just move on to the next. Like on any given deal, we'll call up to like 7, 8, 9 realtors before somebody will say yes. So don't get like discouraged if you call 6 and they all say no, or you can't do this, or it's illegal or whatever. Just move on to the next one. Yeah. Yeah, so just find, people either get it or they don't. So find one that gets it. Here's a little hack for you. eXp Realty, I don't know if you guys are familiar with this brokerage, but they're kind of like a little bit of like a multi-level marketing mixed with the brokerage, right? So like realtors, they get commission regardless, but I think eXp takes it like one step further. So if you find a good realtor who's with eXp Realty, you can, it doesn't even matter what state they're in. If you got a property in Colorado and then you get a new one out in Texas, just ask that realtor, hey, can you find me another realtor in Texas who will do this for me? They'll go do it all for you. They'll call the realtors and they'll pitch them on the double close because they're going to get commission when they get that listing, and then they'll do it for you. That's like exclusively for eXp Realty though. Maybe it would work with other brokerages, but it's worked well for me. They all get a referral fee, but I think eXp takes it like one step further because they're a little bit of like a, yeah. So yeah, just like call a lot of realtors, expect them to say no, and then if you get a good one, ask them to kind of bird dog for you.
Are there any other realties like EXP that do the multi-level marketing?
Not that I know of. But
Okay.
Similar.
One thing too, if you want to just avoid the whole realtor hunt down process entirely, is go to Brokerless. Have you heard of Brokerless? For $89, we can get our most double closes in most states listed on there. It price fluctuates, and Jack is a fucking crazy man. I don't know if anyone's ever dealt with Jack. That man is legit crazy. I'm like, dude, I should start a flat fee MLS listing company. I got to take you out of business. So yeah, you could always just kind of dip your toe into the pond that way. What we see a lot of LIA members doing is they'll just drop a note in Discord, and someone almost always has a double close friendly title company in realtor and fill in the blank county or state. So that works too.
What's that? No? Oh. Yeah, no, I was going to say, like, if you're new, double closes, call realtors. It's just pretty much, you got to talk to a lot of them. But your paperwork might not be good, right? You might not have the right contract or anything like that. So if this is your first one and you're a new investor, partner with people that are already doing it. Call Sumner, Mir, Paul, any of these guys and just say, hey guys, I have a double close, want to JV it, let's partner up. They'll say, okay, your contract's shit, use mine, go get it re-signed, and boom, move on with your life. Like, don't overthink this crap. All right, if you want to just do double closes as your business, partner with somebody. It's just like paying for a coach. Partner with somebody that's doing a lot of them, and then just learn, do 3, 4, 5. Your profit margin goes down to half, but now you're not raising capital and all that stuff. But hell, if you could learn it, and then once you've done 3 or 4, go do it yourself. You know, that's pretty much it.
Dude, one of the things that I'm so bullish on, no matter where you're at in the land business, you could be pretty senior, is like when you don't know how to do something, just go partner with someone. You get paid. It's more of a sure thing than you doing it yourself. And what I always ask is, look, I'll give you this deal, but take me along for the ride. So I had done double closes, 3 years ago? But when I got my first double close this year, I called up Mayor. I'm like, I want you to hold my hand. And I learned way more than just like contracting principles. I learned how he nurtures them while they're like in that middle stage. I learned how he talks to real, like I just learned his whole process, and I got paid to do it. It's just a no-brainer, you know. We have people that aren't even inside LIA that just say like, hey, I can't afford coaching, but I'm going to go hunt for deals, and they bring deals, and I show them the full ropes, A to Z. We're doing a subdivide in Texas right now with a guy. What's his name, Jordan? Max. And brought the deal, and I've been working with him every single week because there's a couple $100,000 of margin there, and he gets to learn the ropes. So I'm pretty bullish on that. Did that help answer the question? Yeah, it's kind of a roundabout. There's no easy answer to it, unfortunately, but realtors are flat fee. Next question.
Hey.
Cool.
Anyways, could you explain how some dialogue would go? Let's say you get a deal and you're going to double close it. You're like, hey, right away, the number's a little bit off. It's not going to be a cash one. So basically, what are you saying to that seller? How is it going with talking to the seller, getting it contracted, and then talking to the agent on the back end? What's that kind of that initial conversation look like?
I think it should be more exciting. Let's give it to Jordan, our acquisition manager, and Jordan can tell you because Jordan's been locking up double closes. Do you want to hand that mic to Jordan? What I will say, just as a primer, less is more. Do not over-explain a double close. You will get yourself in a hole quick, and they're always going to say no because it doesn't make sense to them. I let the contract do the heavy lifting. I say, look, we're going to slide out the close period. I'm going to pay you for the time in between. You keep that money. When you sign, I send it to you. And then the contract lays out the POA terms, and most people just sign. But if I try to explain what I'm doing in the middle, they almost always say no. Go ahead.
Yeah, so Sumner's going to probably not like me for this one because I kind of take the opposite approach.
Jordan's an over-explainer.
Yeah, and I'm a transparency guy, and I've talked with a lot of y'all today about this, especially when it comes to double closes. Like, I'm one of the type of people, I don't like to explain it on the back end. Like, if there's any problems that come up, it ends up just kind of being overwhelming. So I like to be over-transparent. And what I found a lot of success lately is like, we'll come in with these cash offers that don't make sense. The numbers don't work, but then we'll go back to these sellers with a double close where we're able to offer a little bit more money and it makes sense to the seller. And then, you know, on the back end, like they're getting exactly what they want. And then, you know, we're getting, 30, 60 days longer extension period to sell the property and market it. And I'll be upfront with them because they're getting exactly what they want. They get the cash, we get a little bit more time to market the property, and it's a win-win for everybody.
Yeah, what I will say, so it's interesting, like the comparison. So one of our other acquisition managers, Edgar, does the complete opposite. Like he's just send the contract, they figure it out on their own, and he gets way more double closes than Jordan. But when Jordan gets a double close, it's ironclad. Like they're big margin deals, and the seller knows exactly what's going on. And we've never had any issues. And Jordan always gets the lowest earnest and the longest time frame for what it's worth. But your actual conversion is going to be lower than Edgar's. One of my favorite little quips that I like to use, I love just having quips in my back pocket, man. Like if you have a good quips, you can win any conversation. Just quip it up. My little quip is I like to ask the seller, how long have you owned this property? They say, well, I've owned it for 25 years. I'm like, has anyone ever paid you for continuing to own it? They say no. It's like, cool, I'm going to pay you whatever, $500, $1,000 for the next 3 months. I'm going to give you the price you want. I'm going to send that money to you immediately, and you're going to get paid to keep on doing what you've been doing. And they're like, whoa, that's interesting. And it's funny how motivating $500 in your hand today can be. It's really weird. It's not a lot of money, but when you get it that day, it's an Xbox, man. People get fired up on it. It blows my mind that you can control such an expensive property for $500. It's an amazing arbitrage.
Yeah, I take the exact opposite approach of Jordan. I'm not saying this is like the correct way to do it at all. I would actually probably advise against it, but I just say nothing to the seller. Yeah, I tell them nothing. If they ask, like what's going on, I'll usually just say we're waiting on the title company, waiting on a commitment, waiting on the county. I don't know, like whatever we're waiting on at the moment. Yeah, I mean, like Jordan, he takes this very transparent approach where he's gonna like tell the seller exactly what he's doing. I think that's like really honorable and noble of him to do that. And then on the other spectrum, there's like, sometimes we want to like tell them, and we're gonna say we're gonna work our network of buyers and we're gonna work with our investors. Really, what we're doing is we're putting on the MLS, right? So unless we're just like straight up telling we're putting on the MLS, we're kind of being deceitful regardless. So the contract speaks for itself. It's clearly, I use a one-page contract. It's right there in front of them. So I don't say anything. Cole, you're saying, talking to realtors, like when we go to when they're listing it for us or when we accept an offer on the property, like the buyer's agent? Got it. Yeah. So for the seller's side, I would always put under contract before I call a realtor, 100% of the time. Again, we're like in the business of relationships, right? Like, I don't feel right about like telling a realtor that I'm going to give them a listing that I don't even have. I just think it's like a waste of everybody's time. So I want to have a pretty good idea of a price we can sell for, and then I'll confirm it with the realtor after I get the agreement signed. Yeah, so two-part question. When we're doing double closes, we don't say anything to the seller. The contract speaks for itself. And I want a contract signed before I give it to the realtor.
I pretty much do the same thing as Michael, so I don't really have much to add.
All right, hey Cole, you're my seller, right? I'm gonna just give you a quick example, like what I'll say on the phone. Hey Cole, just so you know, so the exit, we have different exits on our properties, and sometimes it's something we'll buy, sometimes it just doesn't make sense for us. So what we're gonna do is we're gonna end up marketing your property. and we're going to go try to find a buyer. We're going to do all the heavy lifting. You don't have to deal with anybody, no tire kickers or anything like that. So what we're going to do is just extend this contract a little bit longer, and I'm just going to send you a deposit, and that's yours, whether we sell it or not, we find a buyer or not, you get to keep it. And yeah, just buys us a little bit of time. We're going to try to find a buyer for you. If we do change our exit and we decide we want to buy it, then we'll obviously close on it. But if it doesn't work out and we do find a buyer, then we'll just move forward. At the end of the day, it doesn't really affect you at all. So just let me know. Do you want me to send you the money like a check in the mail, or do you want me to just text it to you? That's it.
What if the data is just like way off, right? So you priced it for pasture and it's a piece of wooded land, right? So it's worth 120 at pasture, but 60 grand at wooded. You gave them an offer for 60. Are you going to say that same thing, or like what? I got confused
Cole,
on it. Yeah.
You're a very good overthinker. You're really good at overthinking. Just look at the property. If you see properties similar to what you're offering are selling for 120, you offered like, I don't know, 70K, and you're like, yeah, this isn't enough spread for me. I'm not making my 30K on it. So I'm going to just try to double close on it so I can make my 30K. That's it. So I'm just going to say, hey, look, I could either try to negotiate. Hey, if you want to close on this quick, I could give you 50K. If you want your 70, it's going to take us a little more time. That's simple. I got to go find a buyer. So it's a take it or leave it approach in a way, but yeah.
Sure, but if your contracted price is like at retail because you screwed up the data, it's pretty much, it's either take the cash or we can't do this pretty much.
Yeah, I'm going to have to get a price reduction, or we could do this. I'll go market it, find a buyer for you. But this way you get your number. But if not, I'm just going to try to get a massive price reduction. Like I got a price reduction the other day from $28,000 to $3,000 because I just didn't like the property. And I'll just buy it for $3,000. If I lose $3,000, oh well. But I told the buyer, I'm like, look, you could either do this or this. It's up to you. And he's like, I'll just take the 3K. Okay, cool. Let's go to close. That's it.
Fair enough.
Yeah, I said I can double close it for 21, or I can take 3K now. And he's like, I'll take the 3K.
Cole, a couple things to add on. Overthinkers, man, they love this business. They just love to overthink. I tell you what, and it's not a Cole thing. It's just like an everyone thing. Like the ambiguity you guys hate in this business is why this business works. That's the irony. It's because it's messy. It's because it's inefficient. It's because no one really knows what these properties are worth. That's why we have an edge. So we got to get comfortable in the fact that we're not always going to know the answers. You know what I mean? The next thing is make ridiculous offers. That's the only way you get ridiculous deals. I don't like making ridiculous offers in my actual marketing. I make very reasonable offers, but we make ridiculous offers once we have the lead in. And if you don't ask, you have no opportunity to actually get it. I'm always shocked what people say yes to, you know? So in that situation, whether it's a double close or a cash offer, you have to move both those prices down. That's just a renegotiation question, you know? So, but everyone here, just get comfortable with the ambiguity. Like there's gonna be things that you just don't know the answer to. That's okay. Then I just look at it from a risk perspective. Well, how much could I lose here, right? And you never know the upside. Yeah. 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 Dude, the thing is, we have so many deals, and they're always uncomfortable, and I hate when this happens. I don't like renegotiating on sellers. We have many deals where we've had to renegotiate multiple times. Those are uncomfortable conversations, but it happens. You know, it's just the name of the game. We got a lot of questions. Oh, my man Gary.
Hey, so how do you guys compensate? What's your comp plan for your acquisition people, particularly because the sales cycle can be so long? Mm-hmm. I'm coming from a world where houses, you can sell those in 30 to 60 days, but your close might be 6 months. So how does that work?
Yeah, I think it's definitely a big range, and a lot of that range is going to come from, are they overseas or are they in the US? Like on an overseas team?
I'm talking mostly overseas.
Okay. Yeah, overseas. You're going to pay a little bit more in South or Central America than you are in the Philippines. Maybe, I don't know, 20% more, something like that. Like if we're in the Philippines, on the low end, you can get $8 an hour. We're typically going to pay probably towards the top end. I really do think you get what you pay for. I don't know how Ryland finds $2 an hour VAs. Our average has been $10 to $12 an hour, 40 hours a week. And then we do a couple different things. We've tried a couple different things. Either we'll do a flat commission per contract we close on. So we take it across the finish line, anywhere from $350 to $500 per contract. Really, you have to look at your business though and understand: are you a volume player? Could they eat off that? I want to have a good enough incentive to where they can make what they're making in their base in commission. So if they're at $12 an hour, what is that, like 20K a year total salary, I think? Could they double that in commission? So I want a comp plan where that's possible. And that's a pretty attainable goal. What we also did was we did quarterly goals for the business. We had like a stretch, we had like a base, and we had like a kind of we stayed constant. And if we hit that, those are gross profit numbers. And we hit that, 5K on the top, 25 on the middle, and 1,000 on the bottom. And then I think what's more common for most people, it takes a little more accounting, but it's not that difficult, is doing a percentage of gross. So if they're overseas, I would say 2% to 5%. But again, it depends on what kind of deals you're doing, So like back in the day when I had an acquisition team that was running a business that was doing 30 deals a month, we're paying low amounts per contract we're closing on, maybe $200 per contract, right? If you have a bigger business, they probably want to ride on that upside, right? And so I'd give them a percentage of gross. And in the US, that's going to be pretty much the same, except the numbers are going to scoot up. So I'd say US, probably 5 to 10% of gross, 25 to 40K base salary, something along those lines. So yeah, and I think like a great acquisition manager overseas should be able to make 40K a year, maybe like 50 or 60 if they're just killer. Like the majority that's going to come from comp. And if they're in the US, I'd say 60 to 100. I mean, maybe a little more than 100. Just depends. Yeah.
And that gets paid out once you get revenue.
Yes,
correct?
we do on cash collected. Yeah. Which does mean that there's definitely like that initial ramp of 6 months. They're not really making much in commission. But if you can't weather that storm, what are you doing here? Like I pay a fair salary if you're overseas. Pretty much everyone overseas for me is $12 to $20 an hour. I used to do the $4 an hour game, and I wondered why my turnover was every 6 months I lose someone. Well, these people are just fickle, so I just pay more, and it seems to work out.
Yeah, mine's pretty simple. I have one employee. She just gets an hourly rate and then commission. She gets a flat commission on the buy and the sell of every deal we get, and she gets a higher flat commission if she brings that deal. So it's because she's doing the texting. If it's a text lead that comes in and we close on it, she gets a higher commission than if it was just a deal from mail. Because I still want to get her paid even though she didn't really do anything to get that deal. She still may have drafted the contract. So yeah, she gets hourly rate and flat commission, doubles that commission if she brings the lead in, and that's commission on when we close on it, and then commission when we sell it on the other side as well. And if it's a double close, she'll just get both sides of the commission at once we sell it.
I think everybody that's talking to seller leads need to be on some type of commission, so they get a flat hourly wage, and then they get commission on the deals. So my acquisitions manager is $9 an hour, and he gets 1% of the profit, and that's as soon as we get the cash. So that's good money. Yeah. Yeah. He's making bank. 1% of profit. You're the one that told me. Yeah. You told me like a year and a half ago, 1%. And then you changed it. Yeah, on profit. I don't know. Yeah, he's happy. He's happy. He's a high performer. And then the assistant acquisitions manager gets 0.5%. Sorry. And then the texting manager gets 0.5%. Yeah, and then my mom gets big checks. Yeah.
Real quick before we jump over to Dennis, Michael, do you pay your VA a lot because she's doing a lot of things?
No. I mean, I should pay a decent wage in the Philippines, right? I think we pay $9 an hour. Yeah, which is decent in the Philippines. Yeah. Yeah, I think we started at 5, and then she's just gotten raises over the year.
I'm gonna add something real quick. This is tangential, but on the note of hiring VAs, I don't even know how many VAs I've hired. I've probably in total hired 40 VAs and interviewed, I don't know, hundreds, maybe 500, 1,000 people. Dude, VA is kind of a dirty word. Unfortunately, people look at them different relative to a W-9 or W-2 employee here in the US. And I think that's misguided. Like when I look back on my VA stats, our turnover was nasty. Like we would lose people. I mean, at least about a third of our people would disappear in a year. Jordan, I think we have a pretty good work culture, yeah? I don't think it's like a toxic environment. Like I was just going for the bottom of the barrel, cheapest person I was going to pay the absolute least to. And the tenure wasn't long, right? And I think that like now that we have probably 22 people in all of our businesses, I'm like, dude, the biggest cost is losing people. It fucking sucks losing people. Horrible. And so now what I do with our VAs, I treat them like they're US employees. They get holidays off, they get sick days, I pay them a really fair salary, and I make sure they can ride on the upside. You know, I want them to be able to make 40, 50, 60. I have a quote VA on my team. Who here has talked to Newman? Anyone talk to Newman here? Raise your hand. Yeah, Newman. I mean, he'll probably make 60 grand a year, right? And he came to me making $4 an hour working for a taxi cab service as a VA, and they're in London. That's fucking life changing, you know? And that guy will go to bat for me until the day I die. And so you can find amazing, talented, loyal employees. Just because they're overseas does not mean that they're lesser than someone you could find here. They're lesser because you treat them poorly and you don't pay them right. Rylan. Sorry, dude, it's real, man. It's real. So anyways, I just wanted to add that tidbit in there.
No. I think he's happy.
So for me, like I used to have with my house business, I used to have like 26 VAs on all the time. Like, and my turnover, I'd basically be training a new VA almost every week, and it sucked. And I realized I was paying them like $3 to $4 an hour, and I was getting shit work for shit pay, right? So now with this business, I'm like, let me just go upstream a little bit. So I just brought on an acquisitions manager. She's only working 10 hours a week, but she gets $7 an hour and $200 per deal that she closes, right? So it's not a lot, but the whole goal, I talked to her, I was like, look, we're gonna scale up. This is right now like your base, this is your trial period. And she's going through all my old leads, calling them up and trying to get deals. And she's motivated because she's like, in Venezuela, that's a lot of money, right? So she's like totally happy to do it. Eventually she's gonna go, we have an ascension plan as she goes along. We're gonna get her to $12 an hour and then $500 per deal. So that's my goal, right? So she's working her ass off. Now the other two VAs I have are both getting $8 an hour, and they're non-commissioned. They're just like, you know, doing like all the back end stuff. So yeah.
Yeah, was this helpful? Yeah. Let's see. We got a little more time for questions. Yeah. We good? No. Can we? Would you guys rather cut in a little bit? I don't really have much to say for my speech. Yeah, we'll do a gentle closeout. I don't really got nothing else to say. Is this fun? Yeah. I'm enjoying this. I think there's more questions to go around too. Can we get a mic over to Ari, please? And guys, just as a reminder, we are going to do the raffle before we get out of here. Okay? Ari's back there. Someone is winning a free year to Land Insights. That's a $6,000 a year subscription for free. All right, Ari, what you got?
Yeah, I got a little twist here. So this is not necessarily speculative, but it's new. I'm curious if you could use AI in your business to enhance one metric or one item or solve one problem. What would that be for each of you and why?
Yeah, that's a great question. Dude, it's funny. I am so technologically challenged. Like, I mean that legit. My North Star, my vision is 5 years from now to completely delegate ever using a laptop. I never want to log into a computer ever again. I want to be able to print out my emails and I highlight them, I tell them what to respond to, and they send it off. I hate it, man. I'm not good. Like, I'm one of those guys that's embarrassing. I've used ChatGPT once. So I'm probably the wrong person to ask on this. I do think about AI, and I do think that there's going to be a point in time in the near future where AI completely, and it's actually kind of scary, the consequences it could have to this business, where it completely fixes market selection and pricing. Like that. That was a horrible snap. There you go. And that would make the game much different. That removes the kind of arbitrage of skill, right? Like we could have vastly different results if I send 5,000 mailers versus someone else. That would really level the playing field. So shit, I don't know. I hope that doesn't happen anytime soon. But I think that's probably a few years out, right? Like you can see the trend it's going with price and things like Land Insights. Like it's starting to happen, but AI really hasn't been implemented yet. There's still, I think even with AI, I mean, I guess eventually AI and like machine learning could get up to the point where it has the nuance. There's still a nuance to understanding land. So in that data set of comps, could it really go through and read between the lines and say, wait, this is a bowling alley shaped property in a flood zone with X, Y, and Z problem to it. Could it understand that? Probably. I mean, someone could tell me. So I think that would take a while for it to get to that point to have that human nuance that we have, you know?
Yeah, so in our business, we do two types of mailing, obviously. We have the county-wide approach, which is like a mile wide, right? And then we'll do our subdivision marketing, which is like a mile deep. Our subdivision marketing, our ROAS is much, much higher because it takes a little bit longer, right? It takes like me going in and actually like zooming in on subdivisions, looking at the numbers and like finding an offer that works. So I don't fully understand AI, so I don't even know if it could do this, but basically if somebody could like look over my shoulder or like watch my screen, constantly be like zooming in to subdivisions and give an offer. Zoom back out, find a new subdivision, look at the numbers available, give an offer. And like do that over and over and over again. Because our highest return on ad spend is definitely from our subdivision marketing. So it's got to be closer, like 15x probably. And then I think our county-wide's under 10. So I think we probably average just over 10x. So
What's the comparison between mail sent to subdivisions versus countywide for you?
That's a good question. I don't know. It's probably about 50-50. The thing is it's constantly changing, right? Because let's say last year we sent out 120,000 mailers. Last year we did 10,000 a month. And that was strictly subdivision marketing. Well, those 120,000 mailers are getting sent out twice this year. So, let's say I send out 250,000 this year plus the 240,000, the 120 doubled from last year. So it's constantly changing. And then the next year, those will go out again, right? So it's like constantly changing, but I would say it's probably about 50-50. Okay. Yeah, so to answer your question, I would have them just like looking over my shoulder as we do subdivision marketing and being able to come up with an offer by what we're looking at.
I was thinking something that would be cool is implementing LiDAR data on GIS. So LiDAR can detect like what kind of trees or vegetation's on the land. And I think you could price a property based on that. So if you have a sales record on a specific parcel, you can see what that property is sold for. You can see the types of vegetation on it, and you can break it down even more than just the acreage itself. So I think if you can like implement LiDAR, if you can implement contour lines and like define slope and stuff, I think you can mix that all together. It'd be really cool to price mailers out with. But that would take a lot of computer power for sure.
So we actually were using AI for a little while. We actually had a fully automated three response text messaging that we were doing with AI with completely no inputs from us. It sent the first text, did everything. All we did was just upload the list, and it did absolutely everything. It would give us 3 responses. Once the 3 responses came back, we looked at it and said, okay, cool. And it basically talked exactly how I talked, which is kind of scary, but it worked really well. The reason why we stopped doing it is, one, I hate texting. It's like a lot of noise for basically not a lot. I don't know, it's just me, whatever. But I still use AI now for our website. We have a chat like bot on there. So if somebody goes on our website, they could put in a response, hey, Dennis, you suck. And it'll say, thanks, I know I suck. Or whatever the case may be. But no, it does 3 responses, and then it prompts them to go either fill out a form or comes to us and we get an email or something like that. We use AI for copy, for creating listing copy and stuff like that, which sometimes it's really weird. So like definitely review that. And what else do we do? We used it for like some mapping features. Like we could look at it and like it'll like create like kind of like look at the topography and say like, I don't know. I looked at it once. I never really used it. But there's a lot of different things. It's growing. So yeah.
Of course. I got a lot to say, man. If you left me here all night, I would literally talk to you all night. It's insane. Define yeller. Yellow. Yeah. Yeah, which is funny. Like, dude, I literally spent my whole entire freshman year eating my lunch in the bathroom. Like I used to have such crippling social anxiety, which is funny. Yeah, apparently. Couple things I want to say though, not to scare the bejesus out of you guys as if AI is going to come and like ruin the land business. Couple things to still remember. Like when I was talking about the marketing, the pricing, like marketing this business is still very much a function of like right time, right place, right? So even if like you have the perfect offer and I have the perfect offer, I could get the deal because I just caught them at the right moment or they actually opened the thing. And I really think like when I look at someone like Dennis, I'm like, yo, that's a defensible skill set. Like being personable and being able to work sellers That's a skill set that AI won't be able to compete with for a long time, right? It's like Warren Buffett talks about having a moat around your business. Like, what skill can you use or have to create a moat? Pricing is helpful, but it's definitely like, it could be kind of like a commodity skill set at a certain point. And so just being able to really work these leads. The other thing is like knowing the different angles to make properties or deals work. It's like a new land investor, they could have AI for perfect pricing and think it's a standard flip, and someone else could be like, no, this is actually an entitlement or whatever it may be, right? Let's get yeah. That's absolutely all right. You go for it.
Two thoughts on AI. Look, there's aspects where you kind of have the Iron Man aspect to it, where you can supercharge the way you're doing certain things, whether it's taking the calls, handling, doing your marketing. But when it comes to pricing, price discovery, price transparency, those are two things that are just they're just very sparse. They're sparse data points. And the general rule is you need, for 100 data points, you need at least 5% to get an accurate prediction for the models to do what they need to do. Generative AI is great, but it also hallucinates. So that's not what you want to use for pricing, right? For something like pricing, the availability of data is the Achilles heel. So that skill set, that human skill set, that feel to know where to price things, that's something which I think is I don't think it's going away. Rylan, to your point, maybe you can look at the different components and assist the pricing, but I think overall, as long as the data is not there in the volume that it needs to be, you're kind of limited with what AI can do, at least from a pricing perspective.
Yeah, it's a good point. And a lot of times, like, who here has heard of the proximity features recency framework that I was talking about? Raise your hand if you've heard of that. You heard me say that? A couple people. Okay. So like there's certain, like those are like the order of importance of what I think is most important for comps. But there are situations where we have no comps within close proximity. And what that might look like is I have a subdivision here and there's no comps in it, but I go to the adjacent subdivision, the land has similar features. I could base some pricing decisions off that. Yeah, AI might not be able to figure that out, right? It could get stumped on that. Who's got the mic? Yeah, Vern, you got the mic? Okay, we'll get over to you. Okay, go for it. Sorry, Vern. You did. All right, we're going to come back to you with the mic, actually, because the video needs it for the mic. Is that okay? Vern, we'll go with you and we'll get the mic over to you.
Okay, so there's some pretty crazy things happening in single family and in commercial. Interest rates are high. Dynamics in those markets are changing. How do you guys see the next 6 to 12 months rolling out with land, and if any of those dynamics are going to make their way into land?
Dude, I was really hoping someone would ask me one of these questions. This is one of the things I'm going to make a prediction, and it's going to be completely wrong, and I'm going to look like an ass in a year. So I really don't try to make predictions around this stuff. I really, I'm not the one to ask. But here's the way I've always thought about it. This is why that's why I love rural recreational land. It just resonates with me, man. I grew up in the sticks in Big Sur. That's like that's all we knew. But kind of like Dennis was talking about before, if you have a property that has one use case and single family homes pull back, well, that property loses a ton of its value. I think a 40 acre with trees, with a river, where you could farm on it, you could live on it, you could have self-sufficiency, that's never gonna go out of style. And while like COVID wasn't like just straight up a recession, what we did see is when there was fear in the market, people wanted self-sufficiency, they wanted security. That's a real tangible, usable asset, has a lot of different use cases, and I'm just bullish on rural recreational land. So I think like you definitely you got to tiptoe around right now. Clint brought up a really good thing at his event last year. I don't remember the exact framework. It's like buying A+ properties. Yeah, like so thinking about like all the components of a property, right? Like, okay, what's the access like? What's the topography like? What's the flood zone like? And making sure across the board those are excellent. Like don't buy anything that has multiple B- against it, because would you want to hold that property for the next year? If it's crappy, probably not, right? That double close I talked about in Tennessee, 2 years ago, I probably would have bought that and just gotten the easement. Nowadays, no way, right? So if there's hair on it, I'm a little more scared. The thing that you really have to watch out for is like all the data we use in this business has latency. And so when I'm looking at comps from 6 months ago, the market looks way different now. And so in a market like this, I'm probably applying discount rates to what I'm seeing previously, because I most likely that's not what the market is today. Obviously, you can use under contract and stuff like that and get a little bit of a gauge. What becomes really helpful though is using realtors. Man, these guys have the pulse. They can just be like, dude, showings have dropped by half in the last quarter. Well, that's a data point I wasn't going to get online, and that's super powerful. The truth is, though, like everything in real estate is local, no? There'll still be markets that thrive in a pullback. There's markets with such strong macro trends that there's just undeniable, right? Like job growth, population growth, building's not going to entirely stop. Like Vegas right now, if you guys driven around and seen how much development's going on here, there's a lot of big trends happening. They're building the Hollywood 2.0. They're trying to make the Silicon Valley 2.0. Those are pretty strong trends. I mean, this place still got wrecked in 2008. So what do I know? But yeah, does that help a little bit, man? I'm not going to make any predictions of what's going to come. If I had to guess, it's going to get worse. I'll tell you that much.
Yeah, as far as a prediction, I don't know. But here's something that we've implemented in our business to kind of to protect ourselves, assuming that something will happen. Like he touched on, we only buy quality property. So we implemented this a couple months ago. I only want a really, really high quality property because I think those are going to sell year round, right? There's always a buyer for an A+ property. Even when everything goes to shit, there's still a buyer for it. We started doing more double closes for this reason, right? Nothing protects us more than not actually spending the money on the property. So if things do go to shit in a month, 2 months, and I'm not left holding the bag on that property, I feel, I can sleep at night knowing that. And then the third thing, and I think I could be off, but during 2008, we're buying homes nationwide, right? We're not buying them in just like one local market. In 2008, during the crash, the average decline of a house was 26%, right? We're buying them at like 45%. So we're always going to be guarded a little bit. So even if we have a repeat of 2008, it may take a little bit longer to sell, but if I'm buying it at 45, 50%, I'll still, feel comfortable with the numbers we're buying at.
I think. Oh, sorry guys. I think where it becomes even more paramount is with the value add stuff, right? Like I was talking about earlier, like making sure that what you're bringing to market, someone actually wants that. So that entitlement deal we're doing with paper lots, I mean, I could get totally smoked on that if the market changes, but half the inventory is trading every 30 days. I mean, it would take a pretty major pullback for people to stop building. But that same deal in wherever Arkansas might look totally different. Even the numbers could be the same, So the value add stuff, I'm a little more cautious, I guess.
I think just spec build infill lots is what I'm scared of. So I just entirely avoid those. So in economic downturn, what you see drops the most as far as land prices is stuff in like Las Vegas, Phoenix, all the spec build infill lots. But if you're dealing with stuff that's over 10 acres, there's tons of use cases as long as it's not in an HOA. So I think there's there's many buyers for your properties when you're not just going after something that you're going to build on. So I just avoid that anyways. So I think I'm pretty guarded in that case. But you can always mitigate risk by strategizing your deals, setting up different types of contracts, doing double closes. So just mitigate your risk.
As I said before, I don't do infill, so I'm not looking for that stuff. I don't worry about the housing market as much. So just don't do infill with high interest rates. It's like pretty black and white. One thing I look at too is look at generations that are coming up right now. Cole, you know this, but a lot of people want to move out of the suburbs, out of the cities, and they want acreage where they could have a little farm, have their kids and their goats and their whatever they want, and grow some tomatoes and whatever. That's just kind of like the culture we're kind of trending towards. And as our younger generation gets older and gets ready to buy houses and buy land, that's what they're looking for, right? So go towards that. Go towards like stuff where good markets are. Go right outside those major metros and get land in those areas, and you're always going to have demand. It's that simple. Don't buy in bumfuck Arkansas where there's like the closest job is like 3 hours. You're obviously not going to sell that, right? I don't care if the sell-through rate says it's like amazing, but if your demand goes down, it just like wipes away in a minute, like you're screwed, right? So buy close to where major metros are, and you're always going to win. And then you're also going to have people that would want to buy for land banking. People are going to buy for timber, or whatever the case may be. So if you have big pieces of land, there's more exits. So that's pretty much it.
Of course. Bigger than 5, bigger than 10. Is that bigger than 5?
I look at what the market demands. If the market's saying like the 5 acres are selling like freaking crazy, and I talk to realtors in the area, the realtors are like, dude, if you bring a 5-acre property in this market, it's going to sell in 30 days. Okay. Then I'm going to go for 5 acres. But I look at like some areas, like we marketed to a county in West Virginia. Anything below 40 acres is non-existent. So I'm like, okay, I'm just going to go 40 acres plus. And that's right, like 40 acres to like 500 acres, that's my marketing place. Look at the demand that's for the market and then just go for that demand.
Yeah. This is tangential, but I love like trying to unearth what's next, like whatever little trend is bubbling up. And I think that like, if you're in the right place at the right time, it's pretty easy to get rich. Like, dude, if you worked at Airbnb in 2009, 2010, you got rich. You're working in AI right now, probably gonna get rich. And so I like finding those things where it's like, the wind is in our favor, right? It's like pushing into the sails and we can kind of just ride that. Here's something I challenge you guys to do tonight. And this is a hunch more than like a sure thing. I think like just like fashion, like things go through like cyclical phases. And I think what is hot and going to continue to get hotter for our generation, go on like the Google keyword search or go on like TikTok and look at hashtags. Look up glamping, look up homesteading, look up RV life. That stuff is growing exponentially in terms of interest. There's some kind of need that's not being met currently. People are starting to realize that living in a city and working at W-2 is a scam, right? Our generation is waking up to that, and even generations beyond us. The system's broken. There's got to be a different way. And so what do? We reverse back to what we know best. Walking barefoot in a 40-acre and killing our own meat, man. That's what we know. That's what we love, right? That's in our DNA. If you look at humans, let's see, we've been around for 600,000 years. What's more familiar, living in an apartment or living under the stars? No shoes. Living under the stars for sure. Like that's always going to be deep rooted into our DNA. And so just solve problems in areas where people are raising their hand and say, I want this. I don't feel the same conviction for infill lots personally. There's a little tangent. Yes, yeah.
Yeah, so earlier you had mentioned that you often misprice markets and you have to renegotiate. Mm-hmm. So during that scenario, what are some negotiating tactics you have to cruise through those tough conversations?
Mm-hmm. Yeah, it's good. And honestly, Dennis is probably going to have the most relevant information because you still take seller calls, yeah? Yeah. I haven't taken a seller call in probably, I don't even know, two years at least, something like that. I'm definitely not the best salesperson ever at all. I take the approach of full candor though. I'm just like, we run a business where we make offers on properties. We try to account for all the variables, but there's some things we can't account for, like access, like topography, like slope, like whatever it may be. And I misprice that, and I hate to have these conversations, and I feel like a total idiot right now. But because of X, Y, and Z reason, we need to scoot the price down here, right? So I always link it to like an attribute of the property that I couldn't account for, and I play the role of like, oh, silly me, and I play like this is something that I really don't want to do, and I just make the offer. Like I just get it out there. Beyond that, I mean, I'm sure there's some ninja little psychological hacks you can do, but I think like, just get the offer out there and don't pussyfoot around it. Just get the offer out there. Like just get the offer out and link it to something about the property. I'm never just like, hey seller, I need to pay you 40 because I want to make more. It's like, no, your property's got a 30-degree slope on it and 1 acre is buildable and the other 4 aren't. And sometimes what I'll do is like in that situation, I love doing this with topography or wetlands. I say, look, when I first accounted for this and I priced it out, I priced your property out as a 5 acre because it is a 5 acre, but only one of those acres is usable. Now I was going to pay you 20K an acre, but I got to price that at 20K an acre for the 1 acre and 5 for the back 4. That's just really, I mean, like anyone can get behind that logic. Doesn't mean they're going to say yes to it. But I think it's a little more agreeable than just like sliding the price down and say, you figure it out. But the other thing is that like Jordan can attest to this. I mean, Jordan mainly works on big properties. And so like this is a game of like 1,000 touches. It's so long. Like, we'll make an offer. They say no. They call them back 2 weeks later, have a great conversation. They're kind of getting warmed up again. They say no, and they say yeah. And it's like, a game of ping pong. And so when someone says no, if the properties are like chasing, what I call chasing properties, not leads. If the property is like in our dream list of like, we really want this and we know there's intent behind the seller selling, we know they have an upcoming issue, whatever it may be. We just can't agree on price. We don't give up. We just keep on working them. Like if you guys looked at our CRM, I think you'd be disgusted at the number of touches for some of these leads. That double close I told you about had over 100 texts, like 200 emails, and like 50 phone calls attached to that record over 6 months. That's work most people aren't willing to do. And the reason we were just going back and forth on price, we just could not agree on price. And finally we got it, So like no rarely means no if we know there's real intent and there's some life event happening. It doesn't have to be the sky is falling, but something's happening. Hey, I'm getting a divorce or whatever it may be. Hope that helps.
It does.
Yeah. I don't do any negotiation. Yeah. So I was just going to pass the mic on, but here's what I will say. A lot of times, if you misprice a mailer and you get an accepted offer back, a lot of times the seller knows that you mispriced that. And they're aware of it. So what I will do is we'll send them a template email that just says, hey, we mispriced your lot. We do the best we can to price each lot based on size, topography, acreage, etc. However, sometimes things are missed. This was one of those lots. I'm happy to give you a new offer if you'd like. If not, whatever. A lot of times they're aware that we mispriced the lot, and so they're okay with the new offer, and they'll say, yeah, what can you give me? And we'll just give them a new offer.
This is the radical difference between Mike and I. I would never renegotiate through email. Not the least ridiculous.
Yeah.
Right. So you would say you in particular, your
Yeah.
primary form of communication is via email, correct?
It's only.
Copy. No, I'm just verifying.
Yeah. So I don't have any negotiation tactics for you, except a lot of times if it's mispriced, the seller knows it's mispriced, and they're almost expecting a new offer, right? So don't be afraid to just give them a new offer. You'd be surprised at how many times it's mispriced. I give them an offer at like 5% of what I told them, and they accept it.
Michael, you're like an FBI agent. You even look like one.
I tried to renegotiate one time through email. Crickets, didn't get anything back. I went back to see who got that property or if I should call the guy. This son of a bitch was the guy who bought the property.
Actually, this is just a funny little note real fast. I know we got to go, but this is a funny thing on competition. I think this is a kind of a cool thing. Everybody's worried about competition in the land space. I had no idea this was happening. I bought a lot from a text campaign for $5,000 and I sold it for $15,000. I sold it in an hour to a builder. I get a message from Sean like a week later and he says, hey, you bought the property from Saeed. I was working that lead. And I had no idea. I guess Sean had mailed him at $13,000. Sean had mailed him at $13,000, tried to renegotiate him down to $8,000. The seller said no. I didn't even know this. I sent him a mail or text at $5,000, accepted the offer, and I sold it in a day. Right? So, yeah, this is why I don't worry about competition.
So why would he take a lower offer?
I didn't ask. Don't ask him.
Can you screen for IQ?
Yeah. This is actually what I think about, though. I don't know if this is true. I think Sean warmed him up to the idea of selling for less. Okay. Now got that idea of turning, right time, right place. You know what I mean? I think other mailers set us up to get the deal in some cases. Right. Yeah.
Michael may have offered him like an ETF or an Applebee's gift card. We got stuck in a bidding war with this seller. He included us all in one email chain, like a bunch of land investors, and get a message from Michael that'll offer 1,001 with an Applebee's card. A couple minutes later, Chris Bull comes in, 1,002. I don't even know it. We just got into bidding war and it was hilarious. There was like 10 investors in there and they were all chiming in. It was sad. Nobody. But as far as negotiations, I haven't touched a phone since March. But what I train my team to do is you have to negotiate off of something. So it's pretty much like Sumner runs his negotiations. You have to have something that has to do with the attributes of the property. So if it's steep or something, you just bring up excavation costs for building or.
Look at the moon out there real quick. That is mind-boggling. Yeah.
Wow. He's orange.
Like it's they call that a blood moon. Anyways.
It's okay. I can stop there.
All right, so basically, yeah. So I actually do a lot of renegotiating, and it's the reason why is I actually mail it like 55% just to get people to call in, right? And if I look at the deal and I'm like, yeah, okay, this is perfect. I'll just buy it at 55. I just lock it up for the most part. And after I lock it up, that's when I'll usually renegotiate. Because I'll look at the property, I'll look at the exit, I'll look at all my stuff, and then I'll call them back and be like, hey, look, this is what I found. I saw this, this, and this. I got to do a little bit of work. I got to take 10K off the price. It is what it is. 9 times out of 10, they've already spent the money in their head logically. I'm offering $55,000 for the property. I call them back like a week later after I look at everything. I'm like, yeah, I got to drop it to 45. In their head, they're like, I was going to buy a car, I was going to do this, I was going to do that. They've already spent the money. So yeah, exactly. So now they're just like, I'll still get the car, but exactly, no sunroof. So they're already driving down the road with this car, everything like that. So it's an easy yes, right? We're already under contract, we're already moving forward. I said, hey, look, the price just changed a little bit. Nothing else changes between us. It is what it is. I usually do a lot of take it or leave it. It's like, this is the offer. Do you want to do it? Sometimes they'll say, well, can you do 47? I'm like, if it still works, I'll say yes. But for the most part, I'm like, no, and just kind of see where it goes from there. But the reason why I'm able to do that is because I built really good relationships on the front end, right? So if you have good rapport with your sellers, like, then it's really easy to renegotiate stuff. And 9 times out of 10, like they all said, they know what their property is essentially worth, and they know there's negative attributes to it. So when you could call them out to them, they're like, yeah, shit, I tried to get over this guy, but it didn't work. So I guess I'll just take what I could get and move on with my life, right? They've owned it for 25 years, and now they're just like, yeah, I'll take this. It is what it is.
So just to break down your playbook real quick, essentially you send out the mailers, you get a response, you build up a rapport, you bench them for a set amount of time, you let them build up the emotional value, but then you bait and switch them at the end, drop them 10%. And I mean, I'm being serious, right?
When you put it like that, I sound like a piece of shit, but I mean,
you gotta have more flexibility in sales.
Yeah. It's not that I'm baiting and switching. It's just that when I look at some of the negative attributes, if it's a good property and I could buy it at 55, I'm going to buy it at 55. But if I see negative attributes that I didn't pick up until after I got it under contract, I'm going to lower my price.
Oh, so that's not like a standard move.
No, I don't just say like, I'm going to lock this up at 60 and drop it to 40 because I'm a dick.
Right.
But I do it because there's a reason.
But you could, right? 'Cause you send out broad strokes, like you said, across the county, so you're a numbers guy too.
9 times out of 10, I'm the one winning when I send out those broad strokes.
Right.
Like it's like if I send out a 55% offer, but it's like over the whole county, I'm usually buying a property at 50K and selling it for 125. That's like my average, right? So even though I'm pricing at 55%, but that's the total market, I don't know. It just kind of ended up working out like that.
No, it makes sense.
Yeah.
Yeah.
But like honestly, I don't try to be a dick to the sellers. I just look at it and just like, hey, look, this is what it comes out to be.
It's just business.
Yeah, it's a business. Take it or leave it. And if not, if they want more, I give them options. Hey, look, if that doesn't work for you, no problem. Why don't we just do this? I'll market it. I'll find you a buyer, somebody that actually could pay you a little bit more. Want to do that? Cool. We'll double close. If they don't want to do that, great. Hey, I'll connect you with the realtor. You could list it. It's going to take you 6 months, maybe a year to actually sell. But if you want that, I could do that for you too. No cost. I don't really care. I'm not going to get anything out of it. But maybe it does you a little bit better if you want to get that number. And if they're like, no, actually, you know what? I don't want to wait 6 months. I'll take the 45. Let's just close.
Right.
Cool.
So you
Let's
put
just
the
go
fear
forward.
of time into them. Right.
Yeah.
Do you really want to wait that long? Because right now the deal is on the table. You can
Yeah.
take the money that's in front of you, or you can take the risk for waiting.
Right. And I explain everything too. Look, here's the thing. You could list it with the realtor, right? Maybe they could sell it for $95,000, but let's break that down real quick, okay? $95,000, the realtor's going to take 10% because land realtors, that's what they do. They take 10% off the top, that's $9,500. Now you're at $85,000. Then, minus you're probably going to actually get a price reduction most likely. Nobody's going to offer you $95 right off the bat. They're probably going to offer you $85. So now you're at like $75K. You're probably going to end up paying closing costs, and you're going to do this and that. And you're also going to wait on maybe 6 months to a year. And guess what? You're probably going to make $10,000 more than I'm offering you. So it's up to you. If you want to wait, 6 months to a year and make 10 grand more, or do you just want the money in your pocket today? It's up to you.
Copy.
And then that's it. And say, hey, look, I'm going to send you the contract right now. While I got you on the phone, let's go over it real quick. I'll go over all the steps, everything like that. Any questions? I'd rather just get them off the table now, and we'll move forward. I'll get this thing to title, and we'll close next week. Sound good?
Yeah.
Cool. Let's do it.
Thank you for the playbook.
Sorry, man. That's the last thing I want to say, and we'll be good to go. I totally meant to say this, and Dennis brought it up. But this is like, Jordan, how often do we use this push-pull framework? All the time. This is our bread and butter. So usually, we are pushing, we're trying to get the seller, and we seem needy, and it never works. Being needy in any capacity in life never really works. And so what we do is when we start getting pushback, you know what? I've actually got a good friend, just like you're saying, that's a realtor out here. I'd be happy to see if he can get it listed for you. Of course, we don't know what it's going to sell at, X, Y, and Z. And what I've noticed is that for most humans, but definitely for sellers, a sure thing is way better than the what if am I going to get on the market? Even beyond the time thing, do I know I'm going to get the 100? Because land never sells what it's listed at, right? And so the sure thing is pretty powerful. And I just use a bird in the hand is better than the two in the bush kind of thing, right? The other thing is when you do, I guess that was pushing, not pulling. When you do the push, we're doing a lot of pulling typically. When we do the push, they start to show their cards. Well, I can't do that because X, Y, and Z reason. And once you have that, dynamite. Our whole entire acquisition frameworks, we do ideally a two-part close, if you will. So we have our intro call, and on that intro call, we'll try to suss out, why did you respond to this letter? Why are you on this call with us? Why do you want to sell? Why now? And there's always a reason. Sometimes it's a really big reason, sometimes it's a small reason, but there's always a reason. You need to pinpoint that, and that is what you use for leverage in the negotiation. Price is not what you want to use for leverage. You want to use whatever their problem is. Like everyone says in real estate, you're a problem solver, blah, blah, blah. It's true though. And so figure out what that pain is. There's always some pain associated. Otherwise, they would already have it listed, or you know what I mean? Like there's a reason that you caught them at the right time. And so figure out what that is. And once you know that, you can get much more aggressive with your offers. I think you feel a little more comfortable making big, bold offers, you know? And we don't want to use people's pain against them. It's not like trying to be manipulative, but they have a problem, and sometimes they're disillusioned with the fact that we can actually solve it for them better than anyone else can, you know? Really, at the end of the day, like, we offer a service to sellers. We are liquidity in an illiquid market. That's a service. So, yeah.
Well said.
Of course, man. Yeah.
So, if you guys ever want to do talk about more of this sales stuff, every Wednesday at 2:30 EST, I do a live on Sumner's channel. If you just send me a DM, send me a message, whatever you want to do. I'll bring you on the back end. We could actually do some back and forth. You give me questions. Yeah, I'll call. Well, no, we can't anymore. We got yelled at. We got busted. I can't call leads on Sumner's channel anymore. I got yelled at. But I'll do mocks. You could give me an example, like a scenario, and you be the seller, I'll be the buyer, and we'll just do some role play. Okay. So I have no problem doing that. Anybody, that's whoever wants to do it. We'll do live role plays and everything like that. EST. I'm in Eastern, New Jersey.
So we will bring their seller leads, and we literally call them forth. So I think yeah. As a new land investor, the three bottlenecks, and this is just in the beginning and quickly it becomes other things, is how do I pick a market? So we review everyone's markets. How do I get a deal, and how do I know it's a good deal? So we review everyone's deal, and how do I actually take this deal across the finish line? And we go and actually do that with you, right? That's how we can unlock people making $250,000 in 90 days. It's just focusing on those three things. That's not what's going to get you to level 10, but that's going to get you, some money in your pocket, and then you can use that to build your business. So yeah, man, come join us on the YouTube channel. Amanda, how are we looking? We got to do the raffle. All right, guys, who wants to win some shit? How did you guys like that segment? Was that good? Awesome. Thank you, guys.